Hey everyone, welcome back to our channel where we make videos that help you level up in life. So many people want to start investing, but feel like they just don't know enough about it. They don't know where to begin. Well, here it is. We made this video especially for you. So grab a snack, settle in, and get ready to learn how to invest in just 5 minutes. Yes, we said it. You can actually learn the basics of investing in just 5 minutes. In the next 5 minutes, you will discover what is investing, why you should care, different types of investments, and finally, how to get started. Let's do this. First, let's talk about what investing is. Essentially, investing means using your money to make more money. That's right. Instead of keeping your money sitting around doing nothing, which we call saving, investing lets your money work hard for you. So instead of saving your money, you can put it into things like stocks, bonds, or mutual funds that have the potential to grow over time. And the best part is that once you start investing, you can keep reinvesting your earnings to make even more money. So not only does your money start working for you, but it keeps working harder and harder over time. Next, why should you consider investing? Well, first off, it's a great way to prepare for the future. Whether you're saving up for retirement, a new car, a house, or any other big goals, investing can help you reach those goals faster. Secondly, it's a great way to beat inflation. Inflation is basically when prices go up and the value of money goes down. Without getting too technical, think of it this way. If you have $100 today, it might not be worth as much in a few years, but if you invest wisely, you can often earn more than inflation, meaning your money can grow faster than prices go up. Now let's talk about the different types of investments. There are lots of options out there, so it's important to know your choices. First, we have precious metals like gold. People have valued gold for thousands of years because it holds its value pretty well over time. So if you're looking to hold on to your money for a long time, gold can be a great option. Plus, it's easy to sell if you need cash. However, gold doesn't grow quickly in value, so it's not the best choice if you're looking for big profits. Next, we have mutual funds. With this option, you basically pool your money together with other investors and hire a professional to manage your investments for you. These professionals, also called fund managers, decide how to invest the money and try to make as much profit as possible. And the best part is that you can start investing in mutual funds with just $1. Some popular types of mutual funds include money market funds, which are super safe but don't earn much interest. Fixed income funds that invest in things like bonds and aim to provide regular income. Balanced funds that spread your money across different types of investments to find the right mix of risk and reward, and stock funds that invest in company stocks. Speaking of stocks, let's talk about individual stocks. When you buy a stock, you're basically buying a small piece of ownership in a company. So if you invest in Apple, for example, you would own a tiny part of that huge corporation. Stocks have the potential to generate high returns and can be a great way to grow your wealth over time. However, stocks also come with higher risks. The price of a stock can go up and down a lot depending on how well the company is doing and the overall state of the economy. So if you decide to invest in stocks, it's important to do your research and be prepared for some ups and downs along the way. Lastly, we have bonds and deposits. Bonds are basically loans that you make to a government or a company. When you buy a bond, you're essentially lending your money for a set period of time in exchange for regular interest payments. Bonds are generally considered to be pretty safe and stable investments, which makes them a good option for new investors. On the other hand, you can also look into various types of savings accounts and deposit accounts offered by banks and financial institutions. These accounts typically offer a fixed interest rate and are FDIC insured, meaning that they're very safe. Finally, let's talk about how to get started. Now that you know a bit about different investments, it's time to start thinking about your own financial goals. Ask yourself what you're investing for and when you'll need the money. Once you have a clear idea of your goals, it's time to assess your risk tolerance. Basically, how comfortable are you with taking risks with your money? Are you willing to ride out the ups and downs of the market? Or do you prefer safer investments, even if they earn less? Once you have a good understanding of your goals and risk tolerance, it's time to choose a platform or app to invest through. Do your research and select a reputable platform that offers the types of investments you're interested in and fits your investing style. Start small and invest consistently. Even just $10 a month can add up to a lot over time. And remember to diversify your investments to spread out your risk. By following these simple steps, you'll be well on your way to becoming a savvy investor. But before you go, let us share one last piece of advice. Investing involves risks, and it's important to be aware of common mistakes that can set you back. So don't copy your friends without understanding what they're doing. Don't chase hyped-up investments just because they're popular. Do you want to invest money that you need for emergencies, and do you want to put all your eggs in one basket? So there you have it. Investing in just 5 minutes. We hope this video gave you a clear understanding of what investing is, why it's important, and how to get started. Remember, It's never too late to start investing, and even small amounts can grow into something big over time. Thanks for watching, and happy investing.